Hey there, this is Josh Challenger with AIS Construction Equipment out of Lansing, Michigan. We've reached the time of the year where our days are getting shorter, the corn's coming off the field, and if you're a deer hunter like me, the rut's happening now. But it's also an important time of the year to reflect on how your season went. If you were like many of the industry, it was another successful, if not record-breaking year. So it's important to review with your fleet manager as well as your accountant on what to do to keep your business successful, growing, and thriving. And one of the best tools to use is Tax Section 179. Now what that tax tool is, it's to reduce your taxable income come year end. If you want to reduce the payment to Uncle Sam, it may be a wise time to look at either updating or adding to your fleet. Whatever's going to make sense to keep your business making money. Let's look at a few different examples of how this can help you make or save money. Before diving into the tax relief worksheet, it is important to call out, I am not a tax professional. It is important to review with your accountant, but this is a easy and simplistic way to review how much money can actually be saved by making a year-end purchase. So let's use an example of one of the snow loaders that I just sold. So the sale price of the loader was $165,000. And let's assume for this example that the company made a profit this tax season less than $1.16 million, and he has a tax bracket of 35%. If you made less than $1.16 million, that means you can write off 100% of that purchase price against your taxable income. That means this customer saved over $57,000. And if he was going to finance that loader with 20% down over 48 months, that comes out to 18 months worth of payments to be saved. Now, that has not changed from last year. But what has changed, if your company made more than the $1.16 million, the bonus depreciation did lower. So now, instead of being able to write off 100% over that 1.16 million, they were going to reduce that down to an 80% depreciation in the first year. Let's look at the example and see how that shakes out. So again, this is going to be an example of a company who's made a profit of more than $1.16 million, and they've already exhausted their Tax Section 179. So they've already reinvested back in their company throughout the year with equipment, trucks, trailers, or future repairs, so on and so forth. So for this example, let's use the same numbers, the sale price of the loader at $165,000, and let's assume that their tax bracket is at 35%. So the 80% of the $165,000 gets you down to $132,000 that you can use to depreciate and work against your taxable income. So that would get you down to a $46,000 worth of savings. And again, if you were going to finance that loader with 20% down over 48 months, that's over 14 and a half months worth of payments. Definitely something to look at. All right, guys, that was my brief tax relief review. Again, please talk to your accountants on this. I am not a tax professional, but it's a quick and easy way to show you the magnitude of how much you can save on not paying Uncle Sam this year. If there's anything that I can do to help, my number is below. Feel free to reach out with any questions. I'll be more than happy to help. Thank you very much.